Welcome to Theo Trade. This is Don Kaufman. It's March 28th, 2018. You are watching the Theo Night video. Let's get started by stating the obvious. Amazon gets crushed to the downside by a tune of about 4.4% inside of today's trade, taking most of the NASDAQ along with it. The reason I wanted to start with Amazon is, well, we had a bearish position on Amazon. We have now closed that position profitably. So for those of you that do tune into the videos kind of sequentially, just a few weeks ago, we discussed, again, placing a bearish position inside of Amazon. That was an in-out spread. Amazon's 4% plus down move today gave us more than the ability to exit that trade for beyond the profitability that we were seeking. In addition to it, we also discussed and had on a Netflix bearish in-out spread. That trade subsequently has also been closed. Now, back to Amazon for just a moment. Again, if you watch these videos on a day-to-day basis, we're just a few days removed from me pulling up a chart specifically on Amazon. And one of the comments I made on the chart was, hey, listen, we're just a few months removed from the 1100 level on Amazon. And really, some of this upside potential, it's just one of the most unprecedented moves that we've seen. But at this point in time, now I know a lot of people are looking at this and they're seeing the effects of Amazon upon the NASDAQ. And a lot of people are probably thinking to themselves, the NASDAQ has already been crushed. It's an opportunity. And then you zoom out to this larger look. Again, this larger kind of time frame here on Amazon, and you realize, again, this is just scraping the surface of what could be a much more precipitous drop inside of Amazon. And again, giving back, all the way down to the 1100 wouldn't, first of all, it wouldn't surprise me. It's going to take longer than a couple of days, but it wouldn't surprise me. But you have to recognize the effects of Amazon falling because of the market capitalization would be dire to the broader NASDAQ. Now, speaking of NASDAQ, let's go take a quick glance at the NASDAQ because there's a few things I want to point out on an intraday basis. Now, for those of you that do not trade on an intraday level, all right, this might not look like that much. In fact, as you zoom in on it, it looks to me like a whole lot of chaos, okay, in a trading day. But what this really amounts to, all right, and we'll just kind of draw from like high to low over here. I mean, people, that is a 160 point NASDAQ range. And what gets better than that is when you start actually tightening up the time frames, here's the NASDAQ pretty much ripping 100 points to the upside, over 100 points to the downside, goes for it again, rips up 100, and then eventually, okay, settles out. Again, the close today was fairly mellow. We're only down 82 at the close. And I'm not trying to be sarcastic with this in whatsoever. I'm just stating the absolute facts. This was insane volatility. Now, with some of this insane volatility, the big, question is, all right, Don, where are we headed next? And that's the emails that I'm getting all day long. That's what the members in the chat room are discussing, where are we headed next? All right, for that, let's go over to the S&P futures. Okay. Now, again, you may not trade on an intraday basis. That's neither here nor there. We're throwing off a lot of volatility. One of the things that I've been mentioning day in and day out on these videos, again, you have got to tune into this because here's where I mention specific levels. And if you haven't tuned into the video, one of the key levels that I've been talking about day in and day out, all right, what is it? It's 2626, and we're actually going to draw it on the screen right now, all right? So here is the 26, okay, 26 level. The 2626 in the, again, S&P futures. We keep hitting it, reverberating back off of it, hitting it, coming back off of it. We actually pierced through it. Now, to pierce through it was absolutely monumental volume that traded. Again, I do not want you to think of these levels as support and resistance. They're more, again, think of them as gravity for the marketplace getting pulled towards those levels. Now, we ended up in kind of a precarious place for today's trading session. And I'm just switching the chart right now to a 30-day 1 hour. So why do I call this kind of a precarious place for the marketplace? Because we're leaning a little bit more towards this 2626 level. We have another very key and major level down at 25.75. We have not hit that 25.75 level in quite some time. We got close though the other day, but not quite there. It would not surprise me again inside of the next, day of trade to see these levels not only be breached, but both levels could ultimately be touched. Let me show you why and what really stands out, okay, in terms of trade is let's go to the SPX. So for those of you that don't look at the SPX on a day-to-day basis, I often call it's the mother of all products. The SPX is really driving so much of the trade on a day-to-day basis. And what I'm taking you into is, first of all, you have to realize that the marketplace only has, 4 days this week. Tomorrow is Thursday. That's it. Tomorrow is Friday. And we have an expiration in store tomorrow. So these happen to be the quarterly. So it is, again, it's a Thursday. Markets will effectively be closed this Friday, of course, for the Good Friday holiday coming into Easter weekend. It's a quarterly expiration. That doesn't make a difference. It's the same as a Friday or a weekend expiration. We're sitting with $31 of expected movement, between today and tomorrow. And that, people, that's the big leagues. Right? All right, almost a 22% implied volatility. But if you take a look specifically at the chart, you're going to notice this week we are adhering. Again, we are currently adhering to the expected move in the week. The expected move in the week was plus, or minus about $76. And we literally got up there, touched it, reverberated back down. This is exactly where the week started. I mean, hey, listen, we haven't really traded much below where we started out the week. Now, here's the sector. And this is where, again, everybody's asking me, what do you think? Where are we headed over here? Listen, I know the technology sector got absolutely crushed out there. But what's the sector that really holds the key? Unquestionably, it's the financials right now. The financials hold the key, to the future of the marketplace. Why? The financials held us together today. I mean, if you weren't looking at this, again, not everybody trades on an intraday basis. And when you trade on an intraday basis, you're going to get a better feel for the markets, not just intraday, but out to the future. When you start trading on an intraday basis, you'll see things like this. You realize the S&Ps were down 7. The NASDAQ was down some 82. The advanced decline line in the S&P 100, that's the S&P 100. That ain't half bad. It's a 50-50 AD line. What does that basically mean? Well, half the stocks are up, half the stocks are down. And it's the financials that saved us today. But here's a little bit of a scary look. If you look at the financials and you realize, that there's 1 day left to expiration, and you take a look over at their expected move, that is a 50-cent expected move. People, there's only 24 hours till their expiration. These options have 50 cents of expected move. You start plotting that out on a chart and you're like, what? What's going on? There again are huge bond auctions that have been happening all throughout the course of this week, and it is taking the financials everywhere. I want to show you financials on an intraday basis. Financials were the area of stability. This right now, this is the sector that matters. And to me, that's pretty scary. I don't like to bet my life savings on what Jamie Dimon is going to do next. All right, all sarcasm aside with that one. But by the way, Jamie Dimon throwing me a life raft, I'd take my chances out in the open ocean. But when you look at the financials, that's what actually held the market together, because you got things like XLE. And quite frankly, I've actually been slightly bullish inside of XLE. This is the energy sector. And even XLE had a slippery slope to the downside today. And again, is threatening to actually breach some of the recent lows. So again, financials is kind of the saving grace inside of today's trading session. Again, moving forward, all right, just through the next couple of days, all you really want to worry about right now in the midst of the volatility is levels. You got to worry about levels. This is not so much about being bullish or bearish, as I just showed you a moment ago. The SPX is pretty much where it started out the week. And I want to reiterate that one again before we go on and talk more about those levels. You got to reiterate, we're just above where we started out the entire week. I mean, again, the S&Ps Where do they start out the week? Basically at 2,600. Where are we right now? 2,605. We'd have 5 points of movement. We've been everywhere to get absolutely nowhere. And that's why I jump back over to these levels. You know, the levels can be used for risk management, but right now, you just have to realize what really is in the driver's seat. And again, I think everybody's attention is focused in the wrong areas. People's attention happens to be focused, you know, oh, it's Amazon, oh, it's Google, you know, and it's the little bit of a dog and pony show when the reality is it's the financials right now, again, that are in the driver's seat. Look at the levels inside of the S&Ps, 25.75. If we do see some sell-side activity hit markets tomorrow, we need to stay above 25.75, coming below 25.75, which is, again, only, 30 points lower than we're currently at right now. Coming below this is absolutely dire for the markets. Now, if we are to break to the upside, first of all, you got to get through 26.26, but we don't have another firm level until we get all the way back to 26.82. For right now, again, volatility rules the day. Watch the financials in the next 24 hours of trade. Thanks, everybody, for joining us at TheoTrade. Have a wonderful evening. Bye-bye.